I know what you mean there, because it's funny. My personal system these days now, obviously with a lot of stuff that I do, because I'm interested in the business and the real estate and also the trading. The trading system that I've adopted now, it's very much a sort of medium to longer term trend following system, and I don't look at it very often, and it almost handles itself. But the buy signals I've found, because typically I'm trading the long side of the market in this current market environment, more so in the past 2 months than I can remember for the past like 2 or 3 years. My system is throwing up a lot less buy signals than it ever has, and for me, that's almost like my system saying, "Hang on, now is not the time to be trading the market." So I'm sitting out of the market because I'm not trading the short side. And I know a lot of new traders, they're sitting there thinking, well, I've got my trading float and I want to make sure I've got it in the market all the time so that way I'm, constantly growing my money. But they've got to understand that a system is there to protect you. A system not only tells you when to get into the market, but a system should be there to tell you, hang on, you shouldn't be in the market because I'm not giving you any buy signals.
Yeah, it's just as important to know when not to trade that it is when to trade. That's very, very good. Yeah, absolutely.
And I'm curious then, I suppose that leads on to, obviously, the system that I'm trading at the moment is very sort of on the long side. The systems that you trade, are you trading both sides of the market, or are you just focusing in on one side, or?
Yeah, I'll go both ways very, very easily. It doesn't matter to me. And of course, in the current stock market of the last couple of months, those trades that I have made have been predominantly on the short side. Now, what I do, and I'll give this away for free. This is really simple but important. In a bear market, whatever market you're trading, you shouldn't be 100% short, in my opinion. Even though it's a bear market, you should have some long positions, not in stocks that are dropping, but stocks or markets that are going up, even though, in a bear market, not everything goes down. So you should have some long positions as a hedge to your portfolio of positions, because even in a down market, you can get these sharp rallies that occur without warning. And if you're 100% short, you're going to get hammered on your shorts. So you always want to have a hedge in there. It's kind of like an insurance policy. And likewise, when you're long in a bull market, it's good to have a couple short positions in weaker stocks. This for the same way. In a bull market, it can drop like a rock, unexpected. And with that insurance policy, you're not going to get hurt. So that's another trick.
I think that's really quite valuable, especially when you consider what just happened in the US recently. Didn't you guys have the Dow rallied I think it was like 4% or something like that? It was like one of the biggest single day rallies in like 5 years.
Yeah,
just recently.
Exactly right. That's a perfect example. And so 100% short portfolio that day got hammered. And you just think of this, and this is the way I trade it. If I had 8 positions on in that market, 6 of them would have been short and 2 would be long. That's kind of the ratio that I use, so that, the 6 positions, maybe some of those would have been stopped out on that day, but the 2 long ones did extremely well, and so you don't get hurt when you do that.
I think that's a valuable little tactic and technique people can take and put in their own trading methodologies.
Yeah, absolutely.
I know we've talked a little bit about now just sort of I'm really starting to get an understanding of the way that you approach the market. And it's really good because a lot of the methods and techniques are resonating with me and with the way that I teach a lot of my clients and students as well. Very similar way of thinking. I wanted to shift gears a little bit and find out a little bit about what you're up to now. One of the things that prompted me to arrange this call and jump on the line with you was I had just finished a report that you'd put out. I know you guys put out some really high quality reports. The last one I'd read a long time ago was about swing trading itself, and a new one's just came out now called it's about exchange traded funds, and I'm quite curious to know how that came about, and perhaps you could tell us a little bit more about the report that's just come out.
Yeah, I'd be happy to. With all of our trading courses, we include unlimited email help desk support,
Mm.
around answering clarifying questions on our course material. But even though those courses were not with regard to ETFs, exchange traded funds, more and more our students would start asking us about ETFs. Well, what about ETFs? And why don't you do a course on trading ETFs and so on? And so uh, finally we said, well, you know what, we better do that. And so what we did, though, to be sure that we're hitting the mark for people, is we go out with a survey and ask them one question. What's your number one question about ETFs? And that went out to
Yeah,
100,000 traders around the world. And of course, I mean, whenever we do that, we get an overwhelming response. It's just terrific. And here
yeah,
come all the questions. And that, what does that tell you? That tells you that people are really interested in learning more about ETFs, and it tells you that they got a lot of questions in that regard. And then what
yeah,
Greg does, my son who's a computer whiz, he somehow cooks down all of those responses and sorts them out by, common types of questions, because
yeah,
it's hard to answer thousands of responses. So he boils them down to the key top, let's say top 20 questions that seem to hit 90% of what's being asked. And then we
yeah.
turn that into a report. And I just sit down, frankly, block out a couple of days. It takes me a couple of days to do this. And I give it a lot of thought and try to answer those questions in such a way that will deliver as much knowledge as possible within the confines of the report. And then we send it out. And up till now, as we're talking, over 10,000 traders have downloaded that copy, a copy of
You're
that
kidding.
report.
Yeah,
No, yeah, just in the last week or so. So that's really gratifying. It's in keeping with our philosophy. Yeah, we're running the business, yes, but our first and foremost concern is that we help traders learn to be better traders, and we really want them to get it. You know what I mean?
yeah.